Based on the historical data and forecast, Bitcoin has shown considerable volatility with a recent downtrend followed by a slight recovery. The support price has consistently held at $104,500, while the resistance lingers around $110,200. The RSI indicates that the asset is currently in an oversold condition, fluctuating between 38.9 and 58.5. The Bollinger Bands show that the price has recently touched the lower band, suggesting a potential rebound. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position entry at $104,400 on June 25, 2025, coinciding with the forecast price and the proximity to the support level. A stop loss will be placed at $104,000, just below the support, to mitigate potential losses if the downtrend continues. The initial target price is set at $106,900, aligning with the forecast for June 25, 2025, and the center of the Bollinger Bands. If the price reaches this target, we will consider moving the stop loss to the entry price to secure profits and potentially ride the momentum further. A secondary target price will be $110,200, the resistance level, for substantial gains. This combined approach balances risk and reward, capitalizing on the oversold condition and anticipated rebound while respecting key support and resistance levels. Based on the historical data and forecast, Ethereum has shown significant volatility with a general downtrend from June 11, 2025, to June 24, 2025. The RSI indicates oversold conditions, particularly on June 23 and 24, with readings around 36.3 and 33.4, respectively. The forecast for the next week predicts a continued slight downward pressure, although with some potential for upward movement. Considering these factors, I recommend a long position strategy focusing on the oversold RSI signals, combined with Bollinger Band support. We will enter a long position at $2,380 on June 25, 2025, when the price touches the lower Bollinger Band. The stop loss will be set at $2,350 to limit potential losses if the downtrend continues. The initial target price will be $2,440, aligning with the forecast price for June 30, 2025. To refine this strategy, we will incorporate a dynamic target adjustment based on the RSI. If the price reaches $2,440 and the RSI exceeds 60, we will move the stop loss to break even and set a new target price at $2,500. This allows us to capture additional gains if the momentum shifts upward. Conversely, if the price fails to reach $2,440 and the RSI remains below 50, we will exit the position at $2,380 to minimize losses. This combined approach leverages both technical indicators and forecast data to maximize potential returns while managing risk effectively. This portfolio is the most efficient one because it combines the most reliable indicators and forecasts. Based on the historical data and forecast, XRP has been fluctuating within a range, with support at $2.14 and resistance at $2.3. The RSI indicates periods of oversold and overbought conditions, with recent readings trending towards the lower end, suggesting potential for a rebound. The Bollinger Bands show that the price is currently near the lower band, indicating a possible short-term oversold condition. Given this, I recommend a long position entry at $2.11, placing a stop-loss order at $2.08 to limit potential losses. The initial target price is set at $2.18, aiming to capture a quick profit from a potential bounce. To refine this strategy, I propose a layered approach. If the price reaches $2.18, consider moving the stop-loss to the entry price of $2.11 to protect profits. If the price continues to rise, a secondary target price of $2.3 can be set to capitalize on the resistance level. This layered strategy combines the RSI and Bollinger Band signals, providing a balanced approach to managing risk and maximizing potential returns. The RSI oversold signal combined with the lower Bollinger Band suggests a buying opportunity, while the resistance level provides a clear target for profit-taking. Based on the historical data and forecast, BNB shows a downtrend with recent volatility. The RSI indicates oversold conditions, particularly on June 24, 2025, at 43.9, suggesting a potential bounce. The Bollinger Bands also show that the price is near the lower band, further supporting a potential rebound. My strategy is to implement a moderately aggressive long position. I recommend entering a long position at $636, placing a stop loss at $628 to protect against further downside risk, and setting a target price at $644, aligning with the recent resistance level. This strategy combines RSI oversold signals with Bollinger Band support and aims to capitalize on a potential short-term reversal. To refine the portfolio, I suggest a blended approach. Initially, allocate 60% of capital to the primary long strategy described above, with an entry at $636, a stop loss at $628, and a target at $644. Then, allocate 40% to a conservative strategy. Given the persistent downtrend, consider a short position at $644, with a stop loss at $648 and a target at $637. This diversified portfolio mitigates risk by hedging against potential further declines while attempting to capture a rebound. This combination provides a balanced approach, leveraging both potential upside and downside movements in BNB. Based on the historical data and forecast, Solana shows a downtrend with recent price fluctuations around the $144 to $150 range. The RSI consistently hovers below 50, indicating a weakening momentum, with periods of oversold conditions below 30. The Bollinger Bands have been widening, suggesting increased volatility, with the price frequently touching the lower band. Considering the forecast price is expected to decrease to $142, and the support price is $144, I recommend a contrarian strategy focusing on short-term bounces. We'll implement a combined strategy leveraging RSI and Bollinger Bands to capitalize on these temporary upward movements. Our strategy involves waiting for the price to reach the lower Bollinger Band, specifically around $138, confirming an oversold condition. Entry price will be $138. A stop loss will be placed just below the support level at $132. The target price will be set at $144, aiming to capture a quick profit from a potential bounce. This approach balances the risk of a further decline with the opportunity for a short-term gain. This strategy should be adjusted daily based on the updated RSI and Bollinger Bands readings. Based on the historical data and forecast, TRON has been fluctuating within a narrow range between $0.27 and $0.275. The RSI consistently hovers around the mid-50s, indicating neither strong buying nor selling pressure. The Bollinger Bands show that the price is currently near the middle band, suggesting a period of consolidation. Considering the forecast for the next week, the price is expected to remain around $0.27 to $0.277. I recommend a long position with an entry price of $0.272. Set a stop loss slightly below the support level at $0.268 to limit potential losses. A reasonable target price would be $0.28, aligning with the upper Bollinger Band and a small profit above the recent resistance. To refine this strategy, I will incorporate the RSI levels. If the RSI dips below 30, indicating an oversold condition, consider entering a long position at that price, with a stop loss at $0.265 and a target price of $0.285. Conversely, if the RSI exceeds 70, suggesting overbought conditions, avoid entering a long position. This combined strategy, focusing on Bollinger Bands and RSI, provides a balanced approach to maximize potential returns while managing risk. The most efficient portfolio would be a long position with an entry price of $0.272, a stop loss of $0.268, and a target price of $0.28. Based on the historical data and forecast, Dogecoin shows a downtrend with consistent support at $0.151. The RSI consistently dips below 50, indicating a weakening momentum. The Bollinger Bands are contracting, suggesting decreasing volatility. The forecast for the next week predicts a continued downward trend, with prices ranging between $0.156 and $0.161. Therefore, I recommend a short position strategy. Entry price will be $0.161, placing a stop-loss order at $0.164 to protect against a potential reversal. The target price will be $0.151, aligning with the established support level. To refine this strategy, I'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, it signals an oversold condition, providing a potential entry point. Conversely, when the price touches the lower band of the Bollinger Bands, it also indicates a potential entry point. Combining these indicators, I will enter a short position at $0.161. The stop loss will be set at $0.164, just above the lower Bollinger Band. The target price remains at $0.151, the support level. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Cardano has been in a downtrend, consistently testing the support price of $0.542. The RSI indicates oversold conditions, fluctuating between 25.4 and 38.7, suggesting potential for a rebound. The Bollinger Bands show that the price is nearing the lower band, further reinforcing the possibility of a bounce. My strategy is to implement a contrarian approach, anticipating a short-term reversal. I recommend entering a long position at $0.556, placing a stop-loss order at $0.542 to limit potential losses. The initial target price will be $0.582, aiming to capture a quick profit from the anticipated bounce. To further refine the strategy, I will incorporate the Bollinger Bands as a secondary indicator. If the price breaks below the lower Bollinger Band of $0.533, it would signal a stronger downtrend, and the long position should be exited immediately. Conversely, if the price touches the lower band and then begins to move towards the middle band, it would confirm the anticipated rebound. I suggest raising the target price to $0.602 if the price consistently stays above the middle Bollinger Band. This combined RSI and Bollinger Bands approach will help navigate the volatility and maximize returns while managing risk effectively. Based on the historical data and forecast, Sui demonstrates a downtrend with recent signs of stabilization. The RSI consistently remained below 50, dipping as low as 26.9, indicating oversold conditions. The forecast suggests continued price stability around $2.6 to $2.7. Considering this, I recommend a long position strategy targeting a rebound from the oversold territory. The entry price will be $2.64, with a stop loss at $2.45, coinciding with the established support level. The initial target price is $2.83, the recent resistance level, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests potential for a bounce. If the price touches the bottom of the Bollinger Band at $2.62, it presents a favorable entry point. The stop loss remains at $2.45. If the price breaks through the resistance at $2.83, a second target price of $3.39 can be considered, representing the recent high. This blended strategy combines RSI oversold signals with Bollinger Band confirmation for improved risk-reward ratios. Based on the historical data and forecast, Chainlink demonstrates a downtrend, consistently testing the support price of $13. The RSI values have been fluctuating between 31.5 and 52.0, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been trending towards the lower band, suggesting a potential for further decline. Given this analysis, I propose a short position strategy. We will initiate a short position at $12.9. The stop loss will be set at $13.3 to protect against a potential reversal. The initial target price will be $12.5, aiming to capitalize on the continued downtrend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider covering the short position. Conversely, if the price touches the lower Bollinger Band, we will reevaluate the downtrend strength. If the price reaches $12.5, we will consider moving the stop loss to the entry price of $12.9 to secure profits. If the price continues to decline, we will adjust the target price to $12.6. This combined approach balances risk management and profit maximization, capitalizing on the prevailing bearish sentiment while providing flexibility to adapt to changing market conditions. Based on the historical data and forecast, Dogwifhat has shown significant volatility with a recent downtrend followed by a slight recovery. The RSI consistently dips below 50, indicating a potential oversold condition. The Bollinger Bands suggest periods of high and low volatility. Considering this, I recommend a combined strategy utilizing RSI and Bollinger Bands for enhanced returns. Our primary strategy will be a mean reversion approach. We will enter a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. Specifically, on July 1, 2025, when the forecast price is $0.882, the RSI is likely to be below 20, and the price is near the lower Bollinger Band. We will enter a long position at $0.827, set a stop loss at $0.77, and target a price of $0.896. To further refine our strategy, we'll incorporate a secondary RSI-based trading rule. If the price reaches the resistance level of $0.872 before reaching our initial target, we will take partial profits and adjust our stop loss to the entry price. This mitigates risk and secures gains. If the RSI rises above 80, indicating an overbought condition, we will consider exiting the position or tightening our stop loss. This combined approach, blending mean reversion with RSI and Bollinger Bands, offers a robust strategy for capitalizing on Dogwifhat's volatility while managing risk effectively. The portfolio will be 60% long position, 20% partial profit and 20% risk mitigation. Based on the historical data and forecast, Chainlink demonstrates a downtrend, consistently testing the support price of $13. The RSI values have been fluctuating between 31.5 and 52.0, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been trending towards the lower band, suggesting a potential for further decline. Given this analysis, I propose a short position strategy. We will initiate a short position at $12.9. The stop loss will be set at $13.3 to protect against a potential reversal. The initial target price will be $12.5, aiming to capitalize on the continued downtrend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider covering the short position. Conversely, if the price touches the lower Bollinger Band, we will reevaluate the downtrend strength. If the price reaches $12.5, we will consider moving the stop loss to the entry price of $12.9 to secure profits. If the price continues to decline, we will adjust the target price to $12.6. This combined approach balances risk management and profit maximization, capitalizing on the prevailing bearish sentiment while providing flexibility to adapt to changing market conditions. Based on the historical data and forecast, Stacks has shown a downtrend with recent volatility. The RSI consistently remains below 50, indicating a bearish sentiment, with dips into oversold territory below 30. The Bollinger Bands show a narrowing range, suggesting potential for a breakout. Given the forecast prices hovering around 0.609 to 0.621, a conservative strategy focusing on short-term gains is recommended. We will implement a combined strategy utilizing RSI and Bollinger Bands. The entry price will be $0.609, coinciding with the initial forecast price and the lower Bollinger Band. The stop loss will be set at $0.581, just below the recent low and outside the Bollinger Bands, to limit potential losses. The target price will be $0.666, near the recent high and the upper Bollinger Band. This strategy aims to capitalize on short-term price fluctuations, exiting the position when the price reaches the target or the stop loss is triggered. This portfolio offers a balance between risk and reward, suitable for a volatile market like Stacks. Based on the historical data and forecast, Celestia exhibits a clear downtrend, consistently testing the support level of $1.66. The RSI readings have been predominantly in oversold territory, fluctuating between 23.8 and 40.8, indicating potential for a short-term bounce, but not a reversal of the overall trend. The Bollinger Bands show that the price has been trading near the lower band, suggesting further downside potential. Therefore, I recommend a short selling strategy with a conservative approach. The entry price for this short position should be $1.55, coinciding with the first forecast price and the recent support level. A stop loss should be placed at $1.6, just above the support and the lower Bollinger Band, to limit potential losses if the price unexpectedly rebounds. The initial target price should be $1.44, aligning with the midpoint of the forecast range. If the price reaches $1.44, consider taking partial profits and adjusting the stop loss to break even, allowing for further gains if the downtrend continues. If the price bounces and hits $1.66, close the position to minimize losses. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, JasmyCoin has been in a downtrend, trading between a support of $0.0124 and a resistance of $0.0138. The RSI has mostly been below 50, indicating weakening momentum, with dips below 30 suggesting oversold conditions. The Bollinger Bands have been narrowing recently, which often precedes a breakout. The forecast predicts a slight upward movement, hovering around $0.0122 to $0.013. Considering these factors, I recommend a contrarian strategy aiming to capitalize on a potential bounce from the support level. My strategy involves entering a long position at $0.0125, coinciding with the forecast price and the support level. Given the recent downtrend and the RSI indicating oversold conditions, I will set a stop loss at $0.0114, just below the bottom of the Bollinger Bands to protect against further declines. The initial target price will be $0.0136, near the resistance level, offering a reasonable profit margin. If the price breaks through the resistance, I will adjust the target price to $0.0138. This strategy combines support/resistance levels, RSI signals, and Bollinger Bands for a balanced approach, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Injective exhibits a downtrend with significant volatility. The RSI consistently dips below 50, indicating a prevailing bearish sentiment, with a recent low of 33.8 on June 23, 2025. The forecast data suggests continued price fluctuations around $11, but with a slight upward pressure. Considering the support price of $11 and the recent oversold RSI, I recommend a long position with an entry price of $10.8. Place a stop-loss order at $9.61, just below the recent bottom of the Bollinger Bands, to limit potential losses. A conservative target price of $11.3, aligning with the forecast high, offers a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the bottom band, suggesting a potential bounce. If the price breaks above the upper band of $14.1, it signals a strong bullish reversal, and we can adjust our target price to $11.8. Conversely, if the price fails to sustain above the middle band of $12.2 and continues to decline, we'll exit the position at our initial stop loss of $9.61. This combined RSI and Bollinger Bands approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Sonic exhibits a downtrend with periods of volatility. The RSI consistently remains below 30, indicating oversold conditions, and the Bollinger Bands show the price frequently touching the lower band, further confirming the bearish sentiment. The forecast suggests a continued downward pressure, with prices fluctuating around $0.30. Given these conditions, I propose a contrarian strategy focusing on short-term opportunities within the downtrend. Specifically, I recommend a buy position when the RSI reaches an oversold level of 20, around $0.262. Place a stop-loss order just above the resistance level at $0.36 to limit potential losses. A reasonable target price would be the support level of $0.339, aiming for a quick profit of approximately $0.077. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band while the RSI is below 30, it strengthens the buy signal. If the price breaks above the upper band, it indicates a potential reversal, triggering a stop loss. For the initial buy, enter at $0.265, set a stop loss at $0.36, and target $0.339. If the forecast continues to show a downward trend, consider taking profits at $0.304 and then reevaluate. This combined RSI and Bollinger Bands approach aims to capitalize on short-term bounces within the prevailing downtrend, managing risk with clearly defined stop-loss and target prices. Based on the historical data and forecast, DeXe exhibits a downtrend with periods of volatility. The RSI consistently remains below 30, indicating oversold conditions, while the price bounces between the support level of $8.69 and the resistance of $14.2. The Bollinger Bands show increasing volatility, with the price frequently touching the lower band. Considering this, I recommend a long position strategy when the RSI reaches an oversold level of 20 or below, specifically when the price is near the support level of $8.69. The entry price should be $8.69, with a stop-loss set at $7.66, just below the lower Bollinger Band to mitigate potential losses if the price continues to decline. The initial target price should be $9.12, aiming to capitalize on a potential bounce from the support level and the oversold RSI. To refine this strategy, we can incorporate the Bollinger Bands for price prediction. If the price is approaching the lower band and the RSI is oversold, it suggests a potential rebound. Therefore, upon reaching the initial target price of $9.12, we can reevaluate the situation. If the RSI starts to move towards the overbought level of 80, and the price approaches the upper Bollinger Band, we can consider taking profits or setting a trailing stop-loss. Alternatively, if the price fails to break above $9.12 and the RSI remains oversold, it might signal a continuation of the downtrend, prompting us to exit the position and reevaluate for another opportunity. This combined RSI and Bollinger Band strategy aims to maximize returns by capitalizing on short-term volatility while managing risk effectively. Based on the historical data and forecast, Aptos has shown a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuating below 50 indicates a generally neutral to slightly bearish momentum. Considering the forecast data, a slight upward trend is anticipated, but with considerable price fluctuations. The support price consistently holding at $4.44 provides a strong floor, while the resistance at $5.71 represents a significant ceiling. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be a momentum-based approach utilizing the RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 35, signaling an oversold condition. Specifically, we will enter a long position at $4.41. To manage risk, we will place a stop-loss order just below the support level at $4.38. Our target price will be set near the resistance level at $5.15, aiming for a substantial gain. If the price fails to reach the target and starts to decline, we will exit the position at the stop-loss level. This strategy combines the predictive power of technical indicators with the stability of support and resistance levels to maximize potential returns while mitigating risk. Based on the historical data and forecast, DeXe shows a clear upward trend, especially with the recent price surge to $0.302. The RSI indicates that the asset is currently in overbought territory, nearing 80, suggesting a potential pullback is possible. However, the forecast data predicts continued price increases, reaching $0.296 by July 1, 2025. Considering the support price of $0.273 and resistance of $0.339, I recommend a long position strategy. Entry price should be $0.233, with a stop-loss set at $0.273 to protect against a sudden downturn. The initial target price is $0.296 based on the forecast, but we can adjust it to $0.339, the resistance level, for a more ambitious gain. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently bounced off the lower band, indicating strong buying pressure. Given the RSI nearing overbought territory, a brief consolidation is likely. Therefore, I suggest a tiered approach. First, enter a long position at $0.233, set a stop loss at $0.273. The first target is $0.249, coinciding with the upper Bollinger Band. If the price reaches $0.249, consider moving the stop loss to the center of the Bollinger Bands, currently around $0.197, to secure profits and reduce risk. The final target remains $0.296, aligning with the forecast and representing a significant gain. This combined RSI and Bollinger Band strategy aims to capitalize on the upward trend while mitigating risks associated with overbought conditions.